What is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we're going to do a quick look at UNH, United Healthcare, because there's been lots of drama with the stock, and this stock is falling like crazy. Just a couple weeks ago, the stock was at 600 bucks, and now today we are at 286. Looks like it must be reversing a little bit right now because I just saw 284. So we'll see what happens. But there's a lot happening, right? I mean, a couple months ago, we had the CEO get shot. Then they got a new CEO. Now the CEO just the new one just stepped down a couple days ago. And then Trump came out and said that we're gonna, we want the lowest prescription drug prices for Americans. And, what else do we got going on? We have UNH saying that now they're accused of possible Medicare fraud, right? So there's all these different things going on with this company right now. And the stock is at a almost a 6-year low. So the last 5 years of gains, the stock just erased all those gains. Okay. And if we look at the history of the PE ratio, we can see now we are down probably below a 12 at this point. And again, the last, 10 years or so, this is the cheapest we've seen it. And normally I'm all for buying stocks that have fallen to these sort of levels and are at historic lows. And sometimes it works out really good. Sometimes it it'll just sit at that level for 6 months, if not a year. And you could, there's lots of companies you can look this up. I mean, 3M kind of did this. You could look at Walgreens. For a while, Walgreens kept hitting new lows. Just every couple months it would hit a lower PE ratio. What else? A lot of these companies you think would be safe, they're not though. 3M. What else? Walgreens. I mean, there's a lot of them. I'm forgetting the other one I'm thinking of right now, but there's a couple of these stocks that they do like, sometimes they turn around quick if good news comes out, right? But and I mean, in a case like this is a pretty conventionally solid business model that doesn't have to worry much and kind of just, flows with the S&P and you do all right in terms of gains. But now with all these different things getting in the way, who knows? What's here? What's the forward PE on this? I mean, it's a forward PE of like 11, probably 10, 11 or something. But again, if they cut their earnings, that's the other thing. They suspended their 2025 guidance. So much stuff is up in the air right now. It's hard to value this company, to be honest. But you still have to acknowledge that as a stock falls more and more, most of that risk gets taken out of the stock, right? So I see, I'm always drawn into stocks that are cut fall by 60%, that traditionally they just keep going up and up, like they got very solid. It's not like this is some new startup company. This is a very established company that normally is. Let's look at their income, right? You look at the last couple of years for net income. I guess 2024 was rough, but really on an annual basis, besides for 24, the net income is, it goes up pretty much every single year, right? 2023, they did $22 billion of net income, trailing 12 months, and they're back at $22 billion. So it's not like it's a bad story there. In terms of cash and debt, yeah, they have pretty much double the amount of debt than they do cash. That's not good. And that's something I normally don't like to invest in. Shares outstanding is flat, maybe slightly declining. So I guess that's okay. Dividends are going up and it's consistent, right? So that's another good sign. There's good signs at this company and then there's bad signs. I am not a fan of $72 billion of debt and only 29 billion in cash. But with that being said, the company does over $20 billion a year in net income. So they could pay that off in, 2 years if they really wanted. So there's that. I mean, I don't know. For me right now, where I am highly, I guess you could say I'm not highly leveraged, but I am more leveraged than most points in my, past as far as my trading investing history. So I'm really not in the position to be, buying more stocks right now, especially ones that I'm like kind of skeptical on. So this is part of me wants to buy some shares of this and just, wait it out and see what happens over the next couple months. But part of me knows too that I've jumped into those things before, and sometimes you just will stay flat for 6 months, right? So there's that, or it'll drop. You'll lose 10 to 15%. Like maybe the stock goes down to 250, 240 or something, and then it stays flat, and then you can't do anything because you're down 15% of your position, and I don't sound like I want to sell for a loss. So This is one where I would probably wait it out. I would see if the stock is at this price in like a week or two, then it's more interesting because then that means there's, all the fear has kind of been taken out. But you have to acknowledge that a lot of risk is taken out of the stock when the valuation is cut in half. I mean, we're talking the valuation was what? It had to be close to $600 billion. Now it's only 279. And I mean, say what you want about politics and regulations and stuff changing, but politics and government and laws and all that stuff and regulations, that stuff goes back and forth every year or two, and that doesn't have a long-term effect really. I mean, these companies, whatever, Coke, Pepsi, the traditional companies, they make a comeback, right? They make a comeback, and for a company like this that has a very consistent business model, I don't see any long-term threats here. So if I was going to bet money on this right now, I would bet that the stock does slowly recover. I would say maybe it, bottoms at whatever 260, 270 or something. And then I would say over the rest of the year, I would say it slowly recovers. So because I don't think I think it's going to go back up to 400 bucks, maybe, in under a year probably. But, even though I say that, I'm still acknowledging that there still is a chance that, yeah, the stock can fall 10 to 15% more. And so I don't want to be in a position where I buy into the stock and then it does fall and then I'm stuck because I've fallen into those positions before, and it's just not fun. I'm right now in my career, I'm looking for very consistent gains. And so I need, higher growth stocks. I mean, this is a company that was expected to grow what, 12% for revenue this year, then 7% next year. So not only a deceleration of revenue growth, but also now they're suspending their guidance, and Trump's gonna whatever try to make these. Trump's probably. I mean, the result of that will probably be that this company has lower margins, right? They're probably gonna have lower margins. Um, so if that's the case, then yeah, I mean that can hurt them. So who knows? The stock could hover around 250 to 300 for the rest of the year. That's possible. That's why I don't want to dive into it. But if it, got more extreme where the stock was at like 200 bucks or something, well then it's okay, then it gets kind of to a point of where it's kind of ridiculous, and that might be a time where you want to jump into the stock. So that's kind of the way I see it. So the bottom line is no, I'm not buying shares, but I think it looks like an interesting investment. I think this is like a 50-50 one where, I don't think it's a terrible idea. I just am not in a mood to take on a bunch of risk right now. And so again, in the next couple of weeks, if the stock's sitting at 200 bucks, then I'll feel, that much more confident about it. And I think that'll probably be, I don't think this company is going out of business. I don't think it's going to be a 10 or $20 stock. It could go to 200, but I don't think it's going to go to 20. So that's kind of the way I look at it. It's just risk to reward, and it's how much, for what I'm at right now. I mean, I'm trading on a little bit of margin right now. So if anything, I'm trying to make my gains back in these stocks, let the market fully recover to where it was 6 months ago, and then sell out and, start trying to stack up some cash. But for right now, I just want to see my investments play out, let the market keep running, and return to where it was. So that is my analysis for United Health. Let me know if you guys think what you guys think about this. Are you guys buying the stock? Are you guys selling the stock? Are you waiting? Are you holding? What are you doing? So let me know down below, and I will see you in the next video.